Let me just give Mr. Brown a nudge. Good morning, Sam. Good morning, Paul. It's good to be back. Oh, Sam, pissed off. All right, see you, Sam. And it's one sec live. Oh, Sam's back. Oh, there you go, Sam. Oh, just oh, he's gone. Oh no. Morning, Mr. Brown. One sec. Let me just tell everyone it's live and we can get started. We're back, everybody. We're back. One sec. Hang on. So I'm doing this from my computer rather than my phone today. So it's going to be invite to co-host. There we go. Let's give that a little quick go. Come on down, Mr. Brown. I've not said that in a while.
Let's see very good morning, Ryan. Good morning, everyone.
Oh, there he is.
Happy New Year.
Oh, my Willie just moved. Oh
Christ.
Oh, God. We're starting strong.
Can we start as we mean to go on and all the rest of it? I thought we were meant to be professional and business-like now.
Well, I better start with the legals because I did forget them when I did the Friday fix. So please don't sue. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ, or PIQ Suite or its affiliates, including the hosts, which, if you remember, is Mr. Michael Brown and myself, Mr. Ryan Paisley. I trust that everyone's had a great New Year, Christmas, Hanukkah, whatever you're celebrating. I hope you've had a good one. So what's been occurring, Mr. Brown?
Yeah, indeed. Well, I'm not going to recap 2 weeks worth of
thank God
price action because we would be here all day. So if you want to know what happened over Christmas, go and look yourself, basically. But let's be honest, I would. The one thing I would say about any sort of analysis of the market moves that we saw over that festive period is don't read too much into them. Conditions have been obviously very, very thin, like my hair. Even towards the tail end of last week, as sort of US participants returned, Friday we had S&P 500 volumes. They were still about 20% below the 20-day moving average. And of course, probably about half of that moving average period encompasses the very, very thin festive period anyway. Yeah. So markets really only getting back up and running properly as we kickstart the new trading week and we get going this morning. Nevertheless, just to recap very briefly what happened on Friday, equities did gain some ground. The S&P up by about 1.25%, recovering the lost ground that we saw on Thursday. We have seen treasuries continuing to sell off across the curve, 2 and 10-year yield rising by around 4 basis points Friday. We have seen that downside momentum in treasuries continuing this morning. 30-year yields rising by around 3 basis points in early trade, and Bloomberg headlines just pointing out that the 30-year, which currently trades just shy of 4.85%, that is currently at its highest yield since back in November of 2023. So certainly something to keep on the radar as the new trading year gets underway, and of course as we are just 2 weeks away from President-elect Trump being inaugurated in the United States. Interestingly, though, as despite treasuries selling off and yields moving higher across the curve, we have seen the dollar trade somewhat softer over the last couple of days, with the dollar index dipping back below the 109 handle. I do wonder whether perhaps there is just a little bit of profit taking coming in here. I was looking at the numbers a little bit earlier on today. The dollar index is trading around 4.5% above both the 100 and the 200-day moving averages, which is the biggest gulf between spot and those averages in a couple of years. So just worth bearing in mind that we have come quite a long way in quite a short space of time. And perhaps that is why we are seeing a little bit of wind come out of the dollar's sails this morning. The other market move that has drawn some attention is what's been going on in the commodity space. WTI crude rallying by about 1% on Friday. That is 6 straight daily gains for WTI, which marks the best run since back in April of 2024, about 9 months ago. So, of course, something worth bearing in mind. Not saying that they were going to have any sort of inflationary implications from that just yet, but nonetheless, it is worth keeping on the radar in any case. In terms of data and news catalysts from last week and over the weekend, there are a few bits and bobs worth mentioning. We did on Friday have the latest ISM manufacturing PMI figures out of the United States. The survey coming in better than expected at 49.3 in December, up from the prior 48.4. The details of the report, though, a little bit concerning. Firstly, the prices paid metric, that printing at 52.5, up from a prior 50.3. And of course, one of the big themes that every man and his dog is worried about going into 2025 is the potential for inflation to make a bit of a resurgence. And certainly upside risks around the inflation outlook are more plentiful this year than they were last. And secondly, within that manufacturing PMI print, the employment sub-index, that fell to 45.3, down from a prior 48 spot. And of course, that comes ahead of the all-important December US labour market report, which we get out on Friday lunchtime. In terms of headlines, there was quite a lot, actually, out of the United States towards the back end of last week. Biden seemingly flexing his muscles a little bit in the last couple of weeks of his presidency. The Nippon Steel takeover of US Steel, that has been formally blocked on national security grounds. The fact that this has been blocked on national security concerns is quite frankly ridiculous. I mean, Japan are hardly an enemy of the state of the United States of America.
Well, sorry, but not only that, normally you would do that. Normally you would kind of play that card if it was offshoring kind of strategic resources and stuff, but they would still be creating steel in the US. So it's like you said, yes, it's basically Biden coming out of anything he can just to. But what I will say on this is this story has not concluded. There's going to be far more goes on the merry-go-round before this is actually permanently dropped. I know the current headline is it's dropped, but these things don't go away so quickly.
No, I would fully agree with that. And actually, the next thing I was going to say was that Nippon Steel are going to sue over that. So that is going to be embroiled in a very, very lengthy legal battle in the US courts. Sticking with US politics, Biden again has decided to ban new oil drilling over a whole host of US waters. Of course, President Trump's, one of his big campaign slogans was drill, baby, drill. So we will see how quickly that is unwound, or even if that is unwound, because I think there are some legal constraints around that. Speaking of Trump, the chap he was backing to stay as Speaker of the House of Representatives, Louisiana Representative Mike Johnson, he won a vote last week to retain his position as Speaker of the House. That is not a job I would want to have, Andre, but good luck to him in any case. Sticking with politics, but moving north of the border to Canada, reports over the weekend in the Globe and Mail, which is one of the big Canadian newspapers, that Prime Minister Justin Trudeau is likely to resign this week, potentially as soon as today. There is effectively a party conference for the Liberal Party, which I believe is taking place on Wednesday. Expectations are that Trudeau will be out before that conference takes place. There are also expectations that Mr. Mark Carney, the unreliable boyfriend, could be in the frame to replace Trudeau. Apparently, he's been sounding out Liberal Party MPs over the weekend. Of course, Canada is due for elections in October of this year, but you would expect that if Trudeau is forced out, they will end up with an election taking place much sooner than that. Certainly, the opposition parties will be pushing for that to take place. Away from politics and into monetary policy, we heard from a couple of Fed speakers on Friday. Barkin, who now doesn't vote until 2027, he was saying that the risks around the dual mandate are more tilted towards the inflation side. Frankly, what Barkin says about policy is about as influential as what I say about policy at this point, given that he doesn't vote for another couple of years. We also heard from Governor Kugler. She was saying that she wants to make sure that higher inflation is just a blip, but that the economy is in a good place and the labour market remains resilient. Well, I don't know. I haven't seen a picture of her, so I'm not sure about that one. Moving away from the Fed to the BOJ. We heard from Governor Ueda. Actually, interestingly, before the Christmas break, I remarked that Ueda was speaking on Christmas Day and whether that would bring any fireworks. Well, thankfully, it didn't bring any fireworks. No. And he wrote his script in his remarks this morning, saying that the BOJ will raise rates if economic improvements continue, and that the timing of any rate hikes depends on the economy and incoming economic data. As we discussed last year, given that everyone else is easing policy at a relatively rapid pace, the window for the BOJ to tighten is shutting very, very quickly indeed.
On this, how wide do you think that opening currently is? Because I think you're currently feeling the pressure against your fingers if you had your fingers between the door, to be honest.
Yeah, I reckon they've probably got 25 basis points in Q1, and that's about all they're going to manage.
You think they're going to manage to do it? I don't think they're going to be able to pull the trigger. I don't think they got the minerals.
Well, we'll see. I mean, it certainly does seem like they're dragging their feet on this one. And actually, on that, UEDA again flagged this morning that they're looking at wage momentum as a key driver of when they deliver that rate hike. For those who are unfamiliar, Japan is a very, very unionized country and economy, and they have spring wage negotiations which cover the vast majority of the working population. And obviously, spring is not Q1, so that does somewhat fit in with your view that they may not be able to do anything else. Two more headlines from me. One, if Tom Talks Cars is here, from Friday, Microsoft, they're going to spend $80 billion on AI data centers this year. Good for them, I guess. And last but by no means least, Getty Images. They are said to be exploring a merger with Shutterstock. We'll obviously see if that deal goes to a photo.
As soon as I was like, why the fuck's he mentioning a photo thing? And I was like, I could see it coming. I was like, oh, I know why he's mentioning it. Oh God, slightly strong. Right, thank you for that.
Well, you've got to.
Right, so this quickly rattle through a few headlines via our dear friend Zach, part of the Overnight News Roundup that will be going out as soon as I get off this call. So starting off in the macro space, apologies if Michael, if you said some of these, I kind of was zoning in and zoning out. I'm not really with it at the moment this morning. I've already had a meeting this morning, in my defense, with someone in Australia. Anyway, I digress.
Trump, welcome to my world.
Yeah, true. So in the macro world, Trump reposted a few policy-related articles on his Truth Social account. I can't believe that's still going. One from Newsmax about the need to pass tax cuts first. One from the Post in which he supports immigration visas for highly skilled workers, appearing to side with Elon Musk. And one from the Daily Caller titled "Trump is America's first Bitcoin president. The results will be, I quote, glorious." In the US banking system's reserves, a key factor in the Federal Reserve's decision to keep shrinking its balance sheet, they tumbled below $3 trillion to the lowest levels since October 2020. Moving further afield, oh shit, hang on, no, sorry. And it appears I might be reading the old rap. No, so I think ignore those first two. I think that's previous day's rap or Friday's rap. Apologies.
Oh, Jesus.
I think Zach sent me the wrong thing by looks of it.
Zach.
I'm blaming him. Anyway, today, the Chinese yuan saw sharp knee-jerk weakening at the London handover in the absence of obvious news catalyst at the time, where the onshore yuan broke above 730 level for the first time since 2023, a level the PBOC has been seen to defend through December, so one to keep an eye on. Earlier in the session, it was reported that PBOC is said to plan policy overhaul, saying it's unlikely it would cut rates. Oh, God, what is going on here? Ignore me. So what is going on? What is he sending me this for? I don't know what. I think Zach might have sent me some really wrong stuff. Zach's getting fired in the morning. I'll give you a clue. Right, geopolitical news. North Korea fired what appeared to be an intermediate range ballistic missile into the sea on Monday, coinciding with a visit from US Secretary of State Antony Blinken to Seoul. Chinese hacking operations have transitioned from corporate espionage, military-focused objectives, embedding themselves into critical US infrastructure and telecom networks to disrupt and gather intelligence in preparations for potential conflicts, particularly over Taiwan. That's one from the WSJ. The US Department of State notified Congress of a planned $8 billion arms sale to Iran. Iran, fucking hell, Israel. I'm having a stinker today. You can tell it's a Monday in the first one.
Well, Zach is anyway.
Well, no, I'll take the blame for Israel and Iran. I definitely don't want to get those two messed up. I'll give you a clue.
Really
just in some equity names, Nvidia and Qualcomm are considering using Samsung Foundry for the 2 nanometer manufacturing That says TSMC's prices are too high, according to sources in South Korea. Sticking with NVIDIA, mainly because Tom Talks Cars is on the call. NVIDIA may top Apple as TSMC's top customer this year amid the continued AI trend. That's according to Citigroup analysts, adding that custom ASIC chips will also boost TSMC over the next few years as the ASICs move to ever more advanced processes. And one for Tesla, I believe this was out. It might have even been out Friday night, I believe. Tesla said its China's sales rose 8.8% to a record high of more than 657,000 cars in 2024, while its China sales in December rose 12.8% to a record 83,000 units. Just put in scheme of things, this is still well below BYD and all that stuff, the domestic EV manufacturers in China. And finally, because I just can't get enough wrong this morning, one for anyone that's bullish nuclear and quantum computing names. Good news for you, because Jim Cramer's come out cautioning against speculating on them. So fill your boots.
Jesus.
Jim, if you're listening, I love you really.
I highly doubt he will be, but can't be too careful.
No, this is it. And back to you in the studio before I mess up even more.
Yes, right. Well, let's have a look at the week ahead then, and keep our fingers crossed that it is actually this week that I'm looking at. Obviously, the first full trading week of the year, you'd expect volumes to pick up and liquidity to improve as participants come back to their desk. Well, really from today onwards. It is just worth noting, though, that it is a bit of a holiday interrupted week this week. Thursday sees the United States observing a national day of mourning in honour of former President Jimmy Carter, who passed away over the festive period. That means that cash trading in stocks and in bonds will be on Thursday. So do just bear that one in mind. There will also be various trading hour changes for various futures products. So if you are trading those, then do go and have a gander. In terms of scheduled events for this week, though, we kick things off this morning with a whole host of services PMI figures from pretty much everywhere that you can imagine, although these are final figures for December, so are unlikely to be drastically different from the flash estimates that we received around a fortnight or so ago. We also today at 1 o'clock this afternoon have the flash reading on German CPI for December. Headline inflation, that's seen at 2.4% in December on an annual basis, up from the 2.2% that we saw previously. And of course, this comes a day ahead of the Eurozone-wide figure that we get out on Tuesday. Later on today, we also have factory orders out of the United States. They are expected to have fallen by 0.4% in November. And we also have a 3-year supply with $58 billion worth of 3-year notes being auctioned off at 6 o'clock this evening. Into the remainder of the week then, just in terms of some highlights to keep an eye on. Tuesday, as I just alluded to, we have the latest flash inflation figures from the Eurozone. Headline CPI, that's seen rising 2.4% on the year in December, up from the 2.2% that we saw previously. Core CPI, that's seen holding steady at 2.7%. None of those figures are likely to deter the ECB from another 25 basis point cut at a minimum. That is fully priced for the January meeting on the 30th of this month. Although, of course, do bear in mind that a 50 basis point reduction was seriously discussed at the last Governing Council meeting and is, of course, a possibility at the end of this month were the outlook to worsen. Also on Tuesday from the United States, we get the latest job openings data, and we have the ISM Services PMI, that index expected at 53.5 from a prior 52.1. There's also 10-year US supply on Tuesday as well. Into Wednesday, a few bits and bobs to keep an eye on. We have the ADP employment figure, which is something you definitely shouldn't keep an eye on, given that it bears next to no resemblance to the official payrolls print that we have out on Friday. We also have the weekly US jobless claims figures a day early due to that National Day of Mourning I just mentioned. We have a 30-year auction out of the United States, and we also have minutes from the December FOMC meeting.
Can I throw something at you? And I'm only doing it to kind of stir the pot, to be honest. Bearing in mind, we know that the NFP BLS data is completely bollocks, because they revise it countless times, and then a year later they might even revise it by a couple of million. perhaps ADP is the one we should be focusing on. Yeah,
I'm not even going to justify that with an answer. Moving into Thursday, when US markets will be by and large closed due to that National Day of Mourning, we do have a busy Asia session on Thursday. We have retail sales out of Australia. We also have CPI and PPI figures due out of China. Thursday also sees 4 Fed speakers currently on the schedule, although I'd expect all of those remarks will be moved or postponed due to the aforementioned mourning that will be taking place. And then into...
Sorry.
Oh, glad to deliver. And also on moving into Friday, we have that US jobs report. Headline non-farm payrolls seen having risen by 160,000 in December, a slowdown from the 227,000 that we saw in November. Unemployment, meanwhile, that's seen holding steady at 4.2%, while average hourly earnings growth is set to cool to 0.3 on the month for a prior 0.4. Also on Friday, we have jobs figures due from Canada, consumer sentiment figures from the University of Michigan, and we also have earnings due from Delta Airlines as well. And of course, that comes ahead of the start of Q1 earnings season proper, which is on the 15th of this month, so next Wednesday. That is when we start to hear from some of the major Wall Street banks. So markets back to normal this week, with all eyes on Friday's jobs report.
Thank you very much, Mr. Brown. I apologise for letting the side down. I've spoken to Zach, and we both concluded that it appears it was a delivery method issue, potentially with WhatsApp on desktop. So I have to pull back my blame for Zach sending me the wrong information, but also he did concede that it also wasn't me reading the wrong information. I promise we'll be better tomorrow, but it's first day back. Give me some credit. I am actually technically on dry January at the moment, but not through choice. It's more a case of I just haven't had time to go to the pub. So that might change it. If you're about, Mr. Brown, I think we should christen the year at some point this week. Anyway,
I'm sure I will.
Anyway, thank you very much for that, Mr. Brown. I'll get this out. Well, maybe I won't put this out onto fucking YouTube and Spotify because it's been a bit of a howler from my part. But anyway, you've been amazing, Mr. Brown. Thank you as always. Listeners, thank you so much. I see a few new people in. Welcome to the circus.
I would say we're usually a bit more polished than this, but we're not. So get used to it.
Yeah, exactly. No, I think we've done well today. There's not been many swears, so that's all right. But look, Mr. Brown, as always, here's to a cracking 2025, everyone. Hopefully we bring you some value. If not, as long as you put a smile on your face, I'm happy. And we will see you all tomorrow. Goodbye.
We will indeed.